Good morning and welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we try to help you build your nest egg and pay as little taxes as possible by utilizing the conversion and contribution features within a solo 401k plan. Hopefully that'll help you build some real retirement wealth. So today's topic is solo 401k contribution rules versus the conversion rules. They both have different rules and deadlines. Also, go ahead and type over your questions during the live session, and we'll pause and answer those questions as they come in. They don't have to be specific to today's topic. They could be surrounding any aspect about solo 401k plans and even IRAs. So we cover certain topics during these webinars, and then we also use this session to ask questions. We'll be going live again here in a few hours. So if we don't get to your questions now, you can always join again here in a few hours for our second session of the day. So back to today's topic. And this is actually a good topic. We get a lot of these questions this time of year. So it's duly in order here. So, why the rules are different for solo 401k contributions versus conversions? Well, this is one of the most common areas of confusion with with a solo 401k plan. So that's the difference between contribution deadlines and Roth Solo 401k conversion deadlines. Both of these strategies are very powerful, but they follow different IRS regulations. And misunderstanding them can lead to missed opportunities and even unexpected tax consequences. Let's go to our next slide here. Now, before we continue this topic, let's make sure that you understand the solo 401k eligibility regulations, especially those that are looking to open a solo 401k plan for the first time. So a solo 401k plan is for owner-only businesses. You cannot employ any non-owner full-time W-2 employees who work 1,000 hours or more in your business if they're W-2 employees. You can always exclude W-2 employees who are under age 21, regardless of how many hours they work. Similarly, if you hire any contractors in your business, you can always exclude contractors. So you would still be eligible for a solo 401k plan. So bottom line, solo 401k plans are for owner-only businesses, typically both spouses. In some instances, you have multiple owners in the business. So both owners can participate in the solo 401k plan as long as the business does not employ any W-2 employees who are not owners in the business and they work 1,000 hours or more in the business. So back to the topic of solo 401k contribution rules versus conversion rules. So again, this topic matters for a number of reasons. So number one, contribution deadlines and conversion deadlines are often confused, but they are treated as separate events under the IRS regulations. The contribution regulations, let's talk about that here. So contributions to a solo 401k plan, they're going to be based on your net self-employment income from your business. And they're actually, in other words, those contributions are tied to your business tax return deadline, not the calendar year. So when you're self-employed and you open a solo 401k plan, you have until your business tax return due date plus timely filed extension to make contributions. So this means that contributions for a prior tax year can be made up to your business tax filing deadline, including extensions. If the business is taxed as an S corporation, C corporation, sole proprietorship, partnership, those have different contribution deadlines. For example, if the business is taxed as a sole proprietorship, partnership, or an LLC taxed as any of the above, so a sole proprietorship or a partnership, then you have until April 15 of your self-employed business. Excuse me, you have until April 15 if your business is taxed as a sole proprietorship. You have until April 15 or October 15 extension deadline to make prior year contributions. So, for example, those looking to make tax year 2025 solo 401k contributions, they have until April 15 of 2026 or October 15 of 2026 to make tax year 2025 solo 401k contributions for their self-employed business taxed as a sole proprietorship. If your business is taxed as a partnership or as a S corporation, then contributions have to be made by March 15 or September 15 with an extension. There's a correction that needs to be made on the slide here regarding C corporations. C corporations, they follow the same contribution deadline as sole proprietorships, meaning you have until April 15 or October 15 to make prior year contributions. And these contribution deadlines apply to all contribution types. So employee deferrals, whether pre-tax or Roth, employer profit sharing contributions, whether pre-tax or Roth, as well as voluntary after-tax solo 401k contributions. And of course, if you're trying to make all contribution types for tax year 2025, and if you have not yet opened the solo 401k plan, you can open a solo 401k plan here in 2026, and you can make some types of contributions here in 2026 for tax year 2025. We've actually performed webinars on that specific topic, so we're not going to talk too much about that today. Now, let's talk about the solo 401k conversion deadlines. Because again, the rules are different when processing a solo 401k conversion of pre-tax solo 401k funds or voluntary after-tax solo 401k funds. Those are different from the contribution deadlines that we just discussed. So let's talk about the conversion deadlines. So Roth solo 401k conversions follow calendar year rules, not tax return due date rules. So, if you want to process a Roth solo 401k conversion, it must be processed by December 31st to count for that calendar year. And this applies to both pre-tax Roth solo 401k conversions as well as voluntary after-tax solo 401k conversions. But it's not such a big deal when you're converting voluntary after-tax solo 401k funds as it is when you're converting pre-tax solo 401k funds, and we're going to talk more about that. So again, unlike contributions, conversions cannot be retroactively applied to a prior year. So don't confuse the contribution deadlines with the Roth Solo 401k conversion deadlines. With regards to voluntary after-tax voluntary after-tax conversions, the deadline to convert voluntary after-tax solo 401k funds to the Roth Solo 401k or the Roth IRA is not as critical. So again, the timing is much less critical from a tax perspective. Why? Well, when you made that voluntary after-tax solo 401k contribution, those contributions were already taxed. In other words, you did not get a tax deduction for making that contribution. Therefore, the contributions, those voluntary after-tax solo 401k contributions are not going to be taxable when they get converted. Only the small earnings in that voluntary after-tax solo 401k, when it gets converted to the Roth Solo 401k or the Roth IRA, is taxable. So whether the conversion happens in the contribution year or the following year, the tax outcome is essentially the same. For example, we have a lot of clients that are making year 2025 voluntary after-tax solo 401k contributions here in 2026. So they're making contributions in the current year for the prior year, and they're doing so by the business tax return due date plus timely filed extension. So under the contribution rules, that's fine because you have until your business tax return due date plus timely filed extension to make voluntary after-tax solo 401k contributions in the current year for the prior year. So in this example, in 2026 for tax year 2025, which is okay. And then they decide that they want to convert those voluntary after-tax solo 401k funds in the current year, which is okay as well, because you cannot treat that as a conversion for the prior year, even though the contribution was made for the prior year, because again, conversions are always reported in the year that the funds are converted. But again, it's not going to make any difference if we're talking about voluntary after-tax solo 401k funds because they've already been taxed. So whether it gets treated as a conversion for tax year 2026 or 2025, it doesn't matter because it's still going to be the same outcome. It's not going to be taxable except for maybe some small gains. What is more, the fact that you are making a voluntary after-tax solo 401k contribution in the current year for the prior year is not going to impact your ability to also make a contribution that's a voluntary after-tax solo 401k contribution for the current year, and to also process that Mega Backdoor Roth solo 401k conversion for the current year, resulting in processing two Mega Backdoor Roth solo 401k conversions in the same year, one for the current year and the second for the prior year. So you would convert one for 2026 tax year based on year 2026 voluntary after-tax solo 401k contributions, and you would also convert the second amount for the voluntary after-tax solo 401k contribution that you made in 2026 for tax year 2025. So that always tends to confuse individuals. So don't get confused on that front. So again, this means that if you make voluntary after-tax contributions for a prior year and then you convert them in the current year, the conversion is essentially not taxable very much, only the small earnings. Again, we're talking about converting voluntary after-tax solo 401k contributions. So missing the December 31st conversion deadline is not a tax problem for after-tax funds. Okay. Now that's going to be a little bit different than if you're converting pre-tax solo 401k funds. Those definitely you want to plan on when you want to convert those pre-tax solo 401k funds to the Roth solo 401k, because the deadline is going to matter. So pre-tax solo 401k conversions are very different than converting voluntary after-tax solo 401k funds as part of the Mega Backdoor Roth. So here are some important rules for pre-tax solo 401k conversions. They're always going to be taxable as earned ordinary income. So the full amount that you convert of pre-tax solo 401k funds to the Roth solo 401k, the entire amount is going to be taxable and is going to be taxed at earned income tax rates. So it's taxed at your current marginal tax rate. So you need to complete that pre-tax solo 401k conversion to the Roth solo 401k by December 31st if you want to count it for that year. So for example, if you're processing a pre-tax solo 401k conversion here in 2026, it's going to count for tax year 2026. It's not going to count for tax year 2025, even if you are converting funds that you contributed to the solo 401k as pre-tax contributions for tax year 2025 here in 2026. So you need to make sure that you plan that when you're converting pre-tax solo 401k funds to the Roth solo 401k, because you can never backdate any type of conversion to the prior year. It's contributions that can be made for the prior year in the current year, as long as they are made by the business tax return due date plus time you filed extension. So if you want a pre-tax solo 401k conversion to be reported in a specific tax year, the conversion must be processed by December 31st of that year. If you don't, the conversion is reported in the following year, which may affect your tax brackets, Medicare surtaxes, or other income-based thresholds. Let's see if we have any questions. I don't see any questions at the moment. So we'll continue here. So from a tax bracket consideration when converting pre-tax solo 401k funds to the Roth solo 401k, because it's going to be because it's a taxable conversion, that pre-tax solo 401k conversion could push you into a higher federal tax bracket, which may increase your state taxes depending on your state of residence. And it's also going to increase your federal taxes. So that's why you need to plan accordingly when you're processing a pre-tax solo 401k conversion to the Roth solo 401k. Now, how are Roth solo 401k conversions reported to the government? Well, they get reported on a Form 1099-R. That applies to both pre-tax solo 401k conversions as well as voluntary after-tax solo 401k conversions. The Form 1099-R, if you are a client of my solo 401k financial, as long as you timely request that form, which you can obtain by visiting the Forms tab of our website, as long as you submit that Form 1099-R request, we'll go ahead and issue that Form 1099-R. And it always gets issued by February of the following year. For example, if you process any type of pre-tax or voluntary after-tax solo 401k conversion here in 2026, we'll issue that Form 1099-R copy to you by February of 2027, and then we'll file a copy electronically with the Department of the Treasury by March 31st of 2027. And it's going to report the gross amount converted and the taxable amount converted. And there are specific codes that are used when reporting those conversions, whether it's a pre-tax solo 401k conversion or a voluntary after-tax solo 401k conversion as part of the Mega Backdoor Roth solo 401k strategy. Now, keep in mind that when you convert pre-tax solo 401k funds to the Roth solo 401k, even though it's a taxable event, unlike distributions, pre-tax Roth solo 401k conversions, they are not subject to that upfront mandatory federal tax withholding of 20%. Instead, you have to pay the federal taxes due on that pre-tax solo 401k conversion. You need to pay the taxes due on that conversion with outside funds. So funds from your personal bank account or personal checking account, and you need to do so by your business tax return due date. So it's important to understand that. So you want to plan ahead, because if you're converting pre-tax solo 401k funds and it's a taxable event, you got to make sure that you have the personal funds to be able to pay the taxes due on that conversion, which is going to be driven by your personal tax bracket. So that's why, again, anytime you're converting pre-tax solo 401k funds to the Roth solo 401k, you always want to plan ahead because it's a taxable event. So with regards to contributions to the solo 401k, those are not reported on the Form 1099-R. Those are reported on your business and or personal tax return, depending on how your self-employed business is taxed. So again, different reporting applies to solo 401k contributions versus Roth solo 401k conversions, whether pre-tax solo 401k conversions or voluntary after-tax solo 401k conversions. So the key takeaways regarding the solo 401k contributions rules versus the Roth solo 401k conversion rules are as follows. Solo 401k contributions follow tax return deadlines. Roth conversions follow calendar year deadlines. Voluntary after-tax solo 401k conversions as part of the Mega Backdoor Roth are flexible and usually not taxable, meaning that only the small gains converted to the Roth solo 401k or the Roth IRA will be taxable. That's why you want to make sure you convert those voluntary after-tax solo 401k funds immediately so that there are little gains. Pre-tax solo 401k conversions are always taxable, and they have to be converted by December 31st of the year that you make the contribution, if you want to count it for that year. All conversions, whether pre-tax solo 401k conversions or voluntary after-tax solo 401k conversions, are always reportable on a Form 1099-R. Contributions, on the other hand, annual solo 401k contributions are reported on your personal and or business tax return. And lastly, the taxes due on that pre-tax solo 401k conversion are paid with personal funds, not with solo 401k funds. So by understanding these key differences, this is going to allow you to maximize your tax advantage savings, avoid unnecessary taxes, properly time your pre-tax Roth solo 401k conversion, and of course, stay compliant with the IRS regulations. Okay, I don't see any questions. So that's it for today's solo 401k session. Thank you for investing your time with us. I know that your time is valuable, but we feel that these topics are important. So if you subscribe to our YouTube channel, you'll receive notifications regarding when we go live. For example, we'll be going live again here in a few hours. Please also like us across all the various social platforms, as it helps us to get the word out to other solopreneurs like yourself. Until next time, have a good rest of the day.